Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the buyers have continued to be a bit more dominant and ES has been balancing at higher prices. But looking at the bigger picture, we know that sellers can still step into this market and responsive sellers have been active on the push higher into the 91.75 to 93.75 area. So heading into the open, we're going to be using that as pre-market resistance, and that is still an area where sell side can be active, and we can even see a potential failure off that zone and a push down into the 84.5 to 86.5 pre-market support. Now, short term, that's an important area. That's where the market is held overnight, and that is also the price range where ES balanced yesterday afternoon. So, in order for the buy side to remain dominant and remain in short-term control, ES has to hold above 84.5 to 86.5. A breakdown below 84.5 to 86.5 could lead to a directional move into the 77 to 79, and at that point, that would be turning into a failed breakout from yesterday. So as we come into 77, 79, just know that, responsive buyers can be active there on first test. But if we're coming down on big downside momentum and a lot of broad market weakness, then it may simply be a reaction at the zone before the market starts heading lower. But the 77, 79 is an important area short term, and we can get buyers there on first test. Below that, we have support at 73.5 and then 69 to 71, which is again another area where we can still get responsive buying on first test. On the upside, if we get a breakout through 93.75, the next inflection point is 96.5 to 98.5. We also have an open gap right in that zone, and that's an area where the sell side can be active. And then beyond that, we have resistance at 2102 to 2104, which is a potential failure spot and a good spot for sell side to be active in the market. So aside from understanding the zones and where the market's trading, looking at the econ calendar, the main catalyst today is the FOMC announcement, and typically ahead of that we get two-sided activity. And considering that we've already seen a pretty decent sized move off of the 57.5 support, at this point up at these resistance areas, the risk is on the buy side, right? So if the market opens and you're not seeing a lot of continued upside momentum, it's going to be risky for buyers to step in here. And the path of least resistance is to the downside into at least the 84.5 to 86.5 and potentially even 77 to 79. And then the market can balance ahead of the FOMC announcement. And then after the announcement, we can get a directional move either way. But ahead of it, we're probably going to see more balancing activity. And given that ES is already trading at a pretty aggressive price, it's already put in a pretty decent bounce off that 57.5 level we had a couple of days ago. The higher it goes, the riskier it becomes for new buyers to step into the market. So short term, we can go back up, retest 91.75 to 93.75, possibly even 96.5 to 98.5. But ahead of FOMC, the upside is fairly limited and the reward potential is pretty questionable for any new longs that get initiated up at these resistance zones or close to these resistance zones. So for that reason, it's better to be cautious on the long side up here because the sell side can step in. We went down into the 57.5 support a couple of days ago. By that point, the market was exhausted. It was temporarily oversold. We got a pretty decent bounce off of that oversold condition. So now that has been dealt with, and we could still get some more selling for a retest of 77 to 79. The 84.5 to 86.5 zone is really going to help us set the tone for the day. If ES is holding above 84.5 to 86.5 even after FOMC, then that would signal that the buyers are fairly aggressive and fairly active here, and it can lead to some more upside. But if after FOMC or even ahead of it, we're trading below 84.5 to 86.5, that tells you that we are still in a very two-sided market, and the sell side can step in for a move down into the 77, 79, and possibly even lower. So right now, we are trading in a big balance. The overall bias has to be neutral. You have to be very flexible on your intraday bias simply because we've seen just such big moves over the last 3-4 sessions to the downside and the upside, that you're getting edge on both longs and shorts. So like, even in the overnight session, we saw some pretty decent selling coming in off the resistance zone there. And at the same time, we got edge on the long side off that 84.85 support that developed yesterday afternoon. So you can see that, right now there is edge on both sides, but looking at it from a perspective of just how aggressive a price you're trading at, of course, ES is trading near resistance, and that makes it risky on the buy side. That's the same idea that was covered in yesterday's recap video. So that is the context heading into the open. Cautious on long setups near resistance, and 84.5 to 86.5 is a zone that can be used to determine and establish the short-term or intraday directional bias. So let's see if the buy side can hold it above 84.5, 86.5 off the open. That'll help set the tone. But overall, keep that balanced market idea and neutral bias in mind so you don't get locked into a very bullish or very bearish scenario. So those are the main thoughts. Let's see which side takes over, and understand that ahead of FOMC we may not get any huge moves one way or the other. So that being said, let's see if the buy side can maintain control above pre-market support, and we'll take it from there.